So you've now applied for a loan under the Paycheck Protection Program. You provided that application and supporting documents to your bank. Your bank is going to send that information to the SBA for approval. Once they have that approval, they're going to prepare loan documentation for, as I've talked before, a phase one of this, which is to actually get your loan. I will be your virtual loan officer to explain how that's going to work and further explain the terms of your loan, how it's going to work from the day that you get it to full payment, and hopefully in between there, a good amount of loan forgiveness as well. So given the times that we're in, where we have to do social distancing and there are orders that people are to stay at home, the documents that you sign are going to be sent to your email, and we're going to use a program called DocuSign. You may be familiar with this, you may not be, but it's a fairly simple process where we can verify your identity and make sure that all the documents are signed properly. Now, before you sign your documents, I want to make sure that you understand your loan completely, how it's going to be dispersed, how payments are going to be made, and what you're going to have to do to provide documentation to get part of your loan and hopefully the whole thing forgiven by the federal government through the SBA. Now you've received your funds, and we have to determine how best to use those funds and what we're allowed to do with them. So on your application under the PPP program, you stated that you're going to use the funds from the loan for only 4 purposes. That's going to be payroll costs, including benefits, interest on mortgage, rent, and utilities. These are the only things that you can use the funds for. This also is what you can get your loan forgiven for in the 8-week period after your loan is funded. So we're going to talk a little bit about the forgiveness side of things, but just remember, these are the only things you can use the funds for, and that's what you've promised the government. So when you're trying to get as much of your loan forgiven as possible, you need to understand that the payroll cost, including benefits, has to be a minimum of 75% of the forgivable amount. That means that all of these things are a maximum of 25%. So how that works practically is, if you get a $100,000 loan and you're able to show in those 8 weeks after you get the loan that you have spent $75,000 on payroll and benefits, then you will have $25,000 available to be forgiven under interest, mortgage, rent, and utilities. Now, if the amount of payroll, including benefits, that you spend in those 8 weeks is only $60,000, because it's a minimum of $75,000, now the maximum at $25,000 or at 25% is $20,000. So on a $100,000 loan, if you spent $60,000 in those 8 weeks on payroll, you could also get $20,000 forgivable as a maximum for these expenses here. You now have a pretty good understanding of the PPP program, and you're preparing your application. I want to talk to you a little more specifically about the terms of the loan that you're applying for. So to begin with, the loan amount. So the loan amount is going to be from your calculation on your application based on your monthly payroll amount times 2.5. This is the only term that's going to differ between borrowers. All of the other terms are going to be the same on every single loan under the PPP for the loan portion. So your interest rate for these is going to be at 1%. It's very low, it's excellent. That's going to be your interest rate for the entire term of the loan. Your payments are deferred. There's no payments to be made for 6 months. So if you take out this loan in April, there are no payments to be made until November. In November, you will start making payments, and you will make 18 equal payments, equal monthly payments, to pay off the total amount that you borrowed to begin with and any accrued interest. So your term is 2 years. It's 6 months of no payments, and then it's 18 months of equal monthly payments to end at 2 years and pay off the total loan amount. Collateral. There is no collateral required for this loan. You do not have to pledge a mortgage or a bank account or anything like that. There is no collateral required. And in terms of a guarantee, there is no personal guarantee from the business owner. The guarantee actually comes from the United States government. So this is coming from USA. Now, though you do not guarantee the loan to the bank, you are making promises to the United States government, and that's very serious. You must understand that there are penalties for doing things fraudulently or not following the rules as to what you can do with these funds. So these are generally the terms of your loan. Now that you know them, you get your loan, then we want to get into how we can get this loan forgiven. So I've explained the specific terms of your loan. Now I'm going to talk about the repayment of your loan. To begin with, I'm going to do it based on just the loan portion, as if none of the loan is forgiven, just so that we get a clear understanding of how this loan is going to work. So for calculation purposes, I've done some calculations here based on a $100,000 loan. Obviously, this loan amount comes from your application and what is actually funded to you. Let's use a loan date of April 7. Because all payments are deferred for 6 months, your first payment is not going to be due until November 7th. Again, we're not talking about forgiveness here. We're talking as if $0 was forgiven. Your payment amount on November 7 is going to be $5,627.70. Now, you will have to make, starting on November 7th, monthly payments of $5,627.70, because you will do that for 18 months, and that will fully pay off your loan and interest for your 2-year $100,000 loan under the PPP program. So interest does start from the time that you take money for your loan, but that interest is deferred and payments start on November 17th. You make 18 equal payments of this amount until the loan is fully paid off. So as I said, there's two parts. There's the loan and there's the forgiveness. We're not going to get into the details of the forgiveness, but the amount of the forgiveness. This next part may be surprising to you as a loan applicant, but this is how the loans are going to work in terms of repayment. So as I mentioned, $100,000 loan, you have 6 months where no payments are due, and then this is your payment here. Now within those 6 months, you should provide the documentation to your bank. You really should provide it as soon as that 8-week period is up. And those documents will be provided to the SBA, and they will explain what has been forgiven of your loan. And that amount forgiven is going to forgive principal and interest accrued up to that point on that principal. Now for a simple explanation of how that's going to work in terms of your repayment, let's just assume that $90,000 is forgiven. This aspect of the loan has changed a number of times, but this is how it's going to affect your repayment, and it might not be what you expect. So your original loan was $100,000. Within the 6-month period where your payments are deferred, you provide your documentation, and $90,000 of your loan is forgiven. So now you have a loan amount of $10,000 at 1%. So that loan is, the payments on that loan are deferred for 6 months, but your first payment is still based on that original loan amount. So your first payment is still $5,627.70. Your second payment then will be everything left to pay off the $10,000 plus 1% interest. So this loan will actually be paid off in 2 payments, not in 18 equal payments over time, because the loan payment is based on the original loan amount, not the principal amount after 6 months. This is something that's changed recently, And you need to understand that you can't just use those funds for a number of things and think you have a long time to pay off that $10,000, because you can imagine if your loan starts getting bigger, if this was $1 million, this is a $50,000 payment if $900,000 is forgiven. A $50,000 payment that you're going to have to make on that day 6 months from when the loan has originated. So you may be asking, why is it that you can't pay the unforgiven portion of your loan over the 18 months? The difficulty is that your original loan is going to require some documentation. If we were to change every one of those loans to an 18-month loan based on the amount that has not been forgiven, that's a whole lot of documentation for every bank across the country, and these loans, you have to remember, are being done for every business in the United States. So your loan documentation is going to remain the same. It's just that now with with your payment based on the original loan amount, you're going to pay off that loan very fast. The information contained in this video is not to be construed as legal advice. This is for informational purposes only on the Paycheck Protection Program. This program is changing almost daily, and this video was prepared on April 7th. So everything that you hear, bring it to your legal advisor or financial advisor so that they can give you up-to-date information and information specific to your business.